Welcome to this market and economic update. In this video, we'll talk about the recent decline of the US dollar, the many factors that affect it, and provide a broader perspective on the dollar's important role as the world's reserve currency. For many, the dollar has long been viewed as a symbol of America's economic dominance on the world stage. So when the currency struggles, it naturally raises questions about the country's global standing. So what's behind the recent decline? Trade uncertainties and broader economic concerns have been factors putting pressure on the dollar. These developments have reignited debates about whether the dollar might be losing its privileged position in international markets. Over the next few minutes, we'll get into the cause of dollar weakness, discuss how it affects investors, and zoom out for a broader perspective on where we actually are. First, the US dollar has been the world's primary reserve currency since just after World War I. This has been the case even as concerns regularly surface, such as during Japan's economic boom in the 1980s, the introduction of the euro in the 2000s, and China's economic rise. More recently, some have worried that cryptocurrencies might overtake the dollar. Despite these recurring concerns, the dollar has been resilient. This is due to the depth and liquidity of the U.S. financial markets, the relative stability of American institutions, and the dollar's continued widespread use in international trade and investment. When we think about the dollar in our daily lives, it's tempting to assume that a strong dollar is always beneficial. After all, when we travel internationally or buy foreign goods, it's helpful to have a strong dollar. But there's another side to this coin, no pun intended. A strong dollar can actually hurt American competitiveness abroad, making our products more expensive to overseas buyers. The ideal currency level isn't simply about strength or weakness, it's about finding the right balance for the economy as a whole. Next, understanding what drives the value of the US dollar requires looking at multiple factors. For example, international trade plays a crucial role in currency valuation. When foreign investors buy American goods and services, they must first convert their currencies to dollars, creating upward pressure on the dollar's value. Conversely, when Americans import more than they export, dollars are sold for foreign currencies, typically weakening the dollar. Interestingly, recent tariffs have not strengthened the dollar as economic theory might suggest. Typically, tariffs would reduce imports and the need to sell dollars. However, what actually happened is that companies stockpiled foreign goods ahead of tariffs, resulting in significant import activity ahead of time. Additionally, other factors like capital flows, political uncertainty, and fiscal policy concerns also influence currency movements. Interest rate differences between countries represent another major driver, as relatively higher rates attract investors to U.S. Treasuries through what's known as carry trades. All of this highlights the investment opportunity within currencies. Given different currencies can be impacted by variables that are different from stocks or bonds, this supports the multidimensional philosophy we follow at Dynamic Wealth Group. For example, exposure to different currencies can be added into a portfolio through a global macro fund, managed futures fund, or other alternatives. Finally, while the dollar has recently declined to its lowest level in 3 years, stepping back reveals these levels remain near their strongest over the past 20 years. This broader view is an important reminder not to overreact to short-term movements. A somewhat weaker dollar has actually provided benefits to diversified portfolios. When the dollar falls, international investments can become worth more when converted back to dollars, effectively boosting returns. As this chart shows, indexes for developed and emerging market stocks have outperformed the S&P 500 this year. This underscores the importance of maintaining a broad and long-term perspective on the dollar. We hope you found these Insights on the US dollar informative and thought-provoking. If you are a financial advisor and would like to learn more about our multidimensional approach to asset management or explore ways to diversify portfolios through currency-related and other non-correlated investments, visit us at dynamicwg.com or email us directly at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.